what you're experiencing in Europe and in Asia and in Latin America with LNG is a whole transition to a cleaner energy source for the world. And as the economies have come roaring back after the pandemic, the demand for the product has been off the chart. So you had the Europeans competing with the Asians, who were also competing with the South Americans for LNG supply, for energy supply. So in South America, there was a drought. And then in Europe and in Asia, it was summer power demand. And you're right, most of the time we feel like farmers because we're worried about the weather. In this case, it's the weather and some geopolitical aspects going on in Europe and Western Europe. Exactly. But
yeah.
But at the end of the day, we've delivered about 200% more cargoes to Europe this year to date than we did last year. So we feel very good that we're part of the solution there, and hopefully we can continue to help them and support them.
Yeah, and you talked about Latin America, something we haven't talked about a lot, relying in Brazil a lot on hydropower. But to your point, the drought there has cut reservoir levels, cut hydropower a bit. The wind hasn't blown. We know renewables are a massive part of the future as we work toward a lower or zero emissions world. We all understand that. I think maybe, Jack, the lesson that we're learning now, though, particularly in places like here, like in England, which is, killed coal, they're 100% natural gas and wind for the most part, you've got to be able to fill the gaps. In your career, have you seen a period where demand was this strong suddenly?
No, this is the first time we've seen this type of demand pool, which is why prices in Asia and in Europe are 300% more than they were a year before. So we always knew that the energy transition was going to be a long road, that it was going to take everything to make it happen. It's going to take natural gas, it's going to take wind, solar, eventually hydrogen or some other technology that we just don't even know about yet. So we were expecting demand growth in liquefied natural gas. Our estimates were that we would see this type of supply and demand imbalance sometime in 2023. And it's actually happened. And now I think a lot of that is just pure economic recovery, some weather, and then maybe not so good planning by some of the countries for what their energy needs were going to be.
Yeah, now we've seen, according to the FT, England sort of reaching out to Qatar and saying, do you have any ships for us? And Qatar may be rerouting a couple of LNG ships here because they're trying to fill what little storage they might have. Has the government of England reached out to you, Jack, and said, can you help us?
No, but Brian, we have quite a few Western European utilities that we serve, as well as PGNiG in Poland. So we're trying to do everything we can do to be as flexible with those utilities that need supply right now.
And what I think many people in the world don't understand is that they say, there's a school of thought. Higher natural gas or fossil fuel costs are great for renewables because it kills demand and it drives people toward the renewable side. What I think a lot of people forget is a couple of things. Natural gas is a massive input cost in building renewables, in building wind turbines and the blades and the things that you need to have that clean energy transition. Too high nat gas prices are not a good thing on many levels, correct?
Yeah, so what we're seeing is this big switch back from nat gas back to coal. And you see it in Asia. And the amount of coal that they're burning right now is record levels. And that's just it's not good for the environment in those countries, and it's not good for the world overall. So we like to see a affordable natural gas price where countries feel comfortable with switching because they know that it's reliable and affordable, and it's cleaner than what they're currently using, which is coal and oil around the world. And Brian, we support the producers and the pipeline companies here in America. So today we bought 6.8 BCF from 74 different producers on 17 different pipelines. We spend about $500 million a year buying firm transport from the pipeline companies. We spend over $1 billion a month buying nat gas. And that amount of investment helps the producers, it helps the midstream transporters to reinvest in the system, to build the necessary infrastructure. They can depend on us. Our demand or our production is relatively flat and stable, and it gives them some certainty on their revenues and cash flows. So we think we're on the right side of the situation right now. We're going to continue to try to do our part to make things better around the world.